For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
G'day traders, Stacey Burke from Stacey Burke Trading. A mindset reset, a technical reset, and hopefully a video that just keeps helping traders move 1% better every day in a direction of constant progress. Today we're going to be focusing on the mindset and headspace around setups. What setup are you hunting? One of the things that I talk about repeatedly was recognizing years ago you make money on the days and the setups where it's really easy to make money on. But traders try to trade markets every day, taking trades, which aren't setups. They're just trying to trade a market. And so I constantly reinforce to traders the understanding of hunting setups out on any instrument, rinse and repeat setups on any instrument. So today's focus is on what setup you are hunting, but also understanding the trade, the mechanism of the trade itself in terms of your headspace. Traders get shaken out of winning trades. They get scared to get into winning trades. They hold on to losing trades. They average into a losing trade. They do everything opposite to what they're supposed to do instead of just executing a winning trade setup consistently, not just once or here and there and doing other things in between, but doing the same thing over and over again and nothing else in between. So one of the comments I received today was, so on Tuesday to Friday inclusive, there are only trend trades or reversal trades. Wow, so enlightening. Now my response to that is brilliant, because once you understand that it's the same things every week, just on different instruments, now the next most important enlightening breakthrough for a trader is realizing, number one, great, what setup are you hunting? Are you hunting a long setup, a short setup, a trend trade setup, an inside day setup, 3 days of breakout traders, first red day setups, first green day setups, ACB setups, or just any setup, regardless, whatever setup that you're hunting? And then number two, which instrument has your setup? So if all the markets do the same things, just in different cycles, which instrument has that setup that you're hunting? And then C, don't do any idiotic, self-sabotaging, emotional, impulsive, irrational, impatient things in between that destroy your trading account and your psychological capital. All the things that damage your trading account. As I talk about, do what works, don't do what doesn't work. And I repeat this for traders to understand that the markets are the same every single week. The only variable that can be controlled is the trader themselves, and they are the biggest variable. They're never consistent when their processes, their headspace, their executions, they take trades all over the place. They are the biggest obstacle to their own success. Mental blockages, baggage, all their programming, inborn cognitive dissonance to their own success. So for an example, if I'm hunting out one or two repeating setups, I have a very basic basket, the same basket that I've shown my son, a couple of other currencies possibly, but the main thrust behind this basket is the NASDAQ and the Dow. And as I've spoken, I look at S&P and Russell, but my main focus is typically NASDAQ and Dow, not for any other reason other than I'm just trying to keep things simple. The Japanese yen, the pound yen, and the euro yen. I'm aware that other yen pairs can offer setups in the Asian window. I look for setups in the Asian window. I don't trade London, but often we will get pairs that will give the same rinse and repeat setups even once a month on other major currency pairs in the US window. So I have the pound Canadian, the pound Swiss. They offer the volatility that I'm looking for. US Swiss Euro USD may offer an easy layup trade in the US window. Not necessarily a 5-star scalable, but a nail and bail. And of course, gold, and secondly, silver. I will look at gold primarily as my main thrust. Copper sometimes, but I find that copper moves more in the London and Asian windows. But as we've seen in the last month, it can offer some 5-star excellent opportunities in the US window. Oil, natural gas. I'm looking for one particular setup on these instruments. And then, of course, the cryptocurrencies, Bitcoin being the major primary driver of those pairs. And if we find the easy setups, rinse and repeat setups on any of those cryptos, they behave the same. They are not any different. All markets are the same. Now, reviewing, we talked about this yesterday. Range expansion. We're in a new month, a new timing cycle. Day 2 typically expands the range. If we have a large day 1 runner on an instrument, chances are we're either going to see a continuation trade. It may not even offer anything in our session, but we may see an inside day. Typically, day 2 setups that I'm looking for will expand the range, which means we can see trend trade opportunities. And if it moves in Asia or if it moves in London and I'm trading the US window, well, obviously I'm not chasing that. Sometimes we'll see a low-hanging fruit. But once that train's left the station, I'm not looking to try and chase something that's moving. We saw some examples yesterday of markets that had already left the station. We saw examples today on day 2 trades taking out monthly extremes. Day 3 midpoint range of the week. It's a non-farm payrolls week. Week 1 in a new month, non-farm payrolls week. We can see different templates set up on a non-farm payrolls week. We've talked about that. Day 1, day 2, day 3, reset. Wednesday becomes day 1 into the backside of the week. Day 1, day 2, day 3. There is nothing new under the sun. We're looking for the setups. Chasing pushes, gaps, cycles, sweeps, hunts, arrays, everything else is great. That's excellent. But what setup are you hunting? Now, let me repeat this. Doesn't matter how you trade. Doesn't matter what your overall thesis is, your daily bias, or anything else. There are only 2 setups that you have a choice of. A buy setup or a sell setup. That's it. Everything else is in your head. You're either buying or selling. So you find the setup that offers you the buy setup or the sell setup. If your favorite instrument is a mess, you can create a science project and take trades. But that's not rinse and repeat. That's taking trades, which I have zero interest in. They don't grow my trading account. They're 30-70 at best over time. And those are the types of market conditions that traders try to trade and guess at, and ultimately win some, lose some, engage in bad behavior, get rewarded for bad behavior, and they blow up their trading account. I'm looking for a buy setup or a sell setup. That's it. Whether it's a 3-session setup, a pump and dump, dump and pump, or a 3-day setup, or an all-in 5-star scalable monkey hammer ACB template. Now next, there are only 3 things you can do. There are only 3 things that you can do. Enter the market, place your stop loss, and a take profit level. There's only 2 things that you can control in any trade situation. How much you will lose and how much you will profit on that particular trade. That's it. There is nothing else. How much will you lose? How much will you win? Option 4 is whether or not that particular trade setup offers a level to move to break even or just walk away and let the trade play out. Now, one of the things that I've been focusing on with my son and with other traders, I've talked about nail and bills in particular, an excellent exercise in discipline that I learned from Brent Penfold, a mentor in Australia, is doing 1, 2 through 3. Entry, stop loss, and take profit level, and walking away from the screen. Accepting that I'm either going to get stopped out or the trade will hit a take profit level. That's hard to do for many traders. They want to actively manage trades. Now, one of the most common things that happens to traders is they will get stopped out of a winning trade by trailing it. And most markets, unless it's an ACB template, typically are aware that traders trail winning positions and they come back, even in a winning trade. In a nail and bail market condition, it's not a fully loaded 10-to-1 setup. It's going to either stop me out or go to take profits. You can put a time decay factor in there. I'm going to come back in 30 minutes and go to break even, whatever you want to do. But that's an excellent exercise in discipline if you're executing rinse and repeat winning setups, not guessing what a market might do. I want to sell it because it's up high or buy it because it's down low. What setup is it in your playbook? When you get into the habit of accepting that and becoming a great loser, as Brent Penfold talks about, becoming the best loser, you accept that you've executed your trading plan, and whether it stops you out or hits your take profits, it's an important mental victory in execution and sticking to your plan. Now, this is my basic rinse and repeat setup. And as I've talked about, you should be able to draw your setup out. I look for markets that typically coil sideways, whether I'm going in the long direction or the short direction. We've focused on the higher time frame. Every single trade setup out of the playbook, whether it's a 3-day setup, a 3-session setup, 3 days of breakout traders in the markets, first red day setups, first green day setups, inside day setups, day zero templates, parabolic short squeezes, low-hanging fruit, first bounce after major red news. They all start with the higher time frame in place. Now, today's a great example. I've talked about new month, new timing cycle, monthly extremes, boundaries being broken, markets giving signal days at the beginning of a new month. Now, there's a lot of sciencey gobbledygook out there. Now, this is trading. There's no smart money concepts. There's none of this gibberish. It doesn't matter if there's an algorithm. It doesn't matter if there's a boogeyman. What matters is that if you have a trade setup, you're entering the market, you're placing your stop loss and a take profit level, and regardless of what the market might do, whether it stops you out and takes you out of a trade setup with your risk controlled, how much can I make, how much can I lose, or it tries to shake you out and eventually hits your take profit level. That's trading in a nutshell. The rest is all in a trader's head. All of it. Every single thing. Whatever you can think of. Whether it's an excuse, whether it's an opinion, whether it's a belief. Entry, stop loss, take profit levels. That's it. If you want to go to break even, that's an option. The same thesis applies in the long direction. Whether it starts to go and takes me out, and I'm not even at the screen if it's a nail and bail, because I don't want to sit there and try to figure it out. I go to break even. Maybe I can protect myself on certain setups. I can go to break even and prevent being stopped out with a loss. But I might go to break even and it comes back, and eventually I see it go through my take profit level with ease if I had only just been a bit more patient and allowed the trade to play out. Now, the same things happen again and again and again, whether it's in a currency, whether it's in a metal, whether it's in an index, whether it's a higher time frame setup at the beginning of a new month. Traders had the excellent opportunity of a first green day continuation. Again, ascending triangle, Peter Brandt, classical charting pattern with a higher time frame thesis driving this move for London session traders. Heading into the US window, we have our high bull from the playbook, and we have a market that's in breakout, no major red news on the day, offering traders a fantastic nail and bail reversal back into where the pump began. Now, just take a look. We're in breakout. This market starts the pump. breaks down underneath the high bull, coiling sideways into our US window, 8:45 a.m. New York time. And as I mentioned to a trader, as this was breaking down, we already have our pins up top. We have our 5-minute high bull, entry, stop loss, walk away with a take profit level. On a nail and bail trade situation, there is nothing to manage. We're on a smaller time frame. I'm just looking at a reversal. We're not loading the boat. We're not trying to, buy a house today. We're taking a trade. We're managing our downside, managing our risk, putting a take profit level in, and letting the trade play out. Pump and dump or dump and pump. Remember my simple model. Doesn't matter if it's 3-day setup, a 3-session setup. Those are the trade setups that I'm hunting right there. That's it. See different subtle variations, nothing complicated. If it doesn't set up like that, I'm not interested. Now, I've talked about my friend Steven. He loves A tops and V bottoms. And this is an example. Steven's generously donated me a couple of his screenshots to demonstrate to traders. Same model. It's a reversal setup. Steven loves reversals. That's his expertise. I call him the Shaolin master of reversals. Typically, he will be looking for that from 3rd hour on, 10 a.m. on. Entry, stop loss, take profit level, and that's it. Simple model. Any instrument in either direction. Same setup, rinse and repeat over and over and over again. Entry, stop loss, take profits. That's it. Now, I talked about the pound Canadian. This was an excellent example last week where traders were looking to sell. They were trying to short the pound Canadian heading into the last couple days of the month. And I mentioned there is no indication at all of a sell signal. We have no first red day. We had no other indication with a sell setup on a smaller time frame. There was a reversal setup on Friday, a 50 pip vertical move, but again, an example of why we don't just catch highs or catch lows. This market continues to expand in the long direction. And I talked about you can have all these micro minutia movements all over the chart and put names on them and label them and chase them and do everything else and trade on the 1-minute minutia. But is that scalable? The higher time frame gives us the information we need, and then we hunt the setups when and if they present, and then entry, stop loss, take profit levels, whether it's a scalable setup or a nail and bail trade setup. Today on natural gas, we see an example on day two on the front side, brand new month, market closing in breakout, giving an explosive range expansion trade in the direction of the breakout. And I posted an example from back in May on the Dow Jones. Thursday, on the backside of a week, a market that is now in breakout trending, the same setup, different market, same setup, different market, explosive trend trade ACB template, rinse and repeat, entry, stop loss, hold till close. This is probably the most important slide to impact your understanding. Doesn't matter what trade you take. Doesn't matter what trade you take. Entry, stop loss, a take profit level, and walking away. Those are the only things that you can control. How much you're going to lose and how much you're going to profit on any trade. The rest is all in your head. Rinse and repeat. Round kick, round kick, round kick. Now this is the important part. Not doing idiotic self-sabotaging things in between the round kicks. Rinse and repeat. Winning trade setups, not taking trades. What setup are you hunting? The trader is the only variable and the biggest obstacle to their own success. Jumping in impulsively, taking trades, fear of missing out, taking some more trades, trading 5 or 6 instruments and catching all the moves, but no size on anything and not really setups. They're just moving. Baggage, mental baggage, inborn cognitive dissonance to their own success, even when they know that some of the things they're doing are wrong, they don't stop doing them. Routines and processes are there to create winning habits, hunting winning setups. winning behaviors, defeating all the self-sabotaging behaviors. Rinse and repeat. You make a lot of money on the setups and the days where it's really easy to make a lot of money on, and do nothing else in between. Hopefully this video helps traders rinse and repeat winning setups, not taking 30, 70, 1090 trades and then catching some moves and getting rewarded for bad behavior. Hunt winning setups, repeat that over and over and over again, and do nothing else in between. Have a great day, traders, and may the markets go with you.